0.04% decline that we've seen coming in for the Taiwan index.
Urging them to contribute more to tech innovation amid intensifying rivalry with the United States.
Finally, your portfolio will be feeling good yesterday after a while because the number of stocks that were advancing, well, that moved up a little bit.
The orders should pick up in the Q4 and Q1. So we are looking forward to that.
And now as we start getting in the first rates, about 4 to 5 points up on the Nifty. It's already flashing a little bit of red.
We're going to clock a bit lower than what the number was at the beginning of the year in terms of FY25.
There could be a quarterly difference based on how the mix in our portfolio plays out.
The Nifty, at this point of time, managing to hold on to the 22,800 mark.
Shridham Desai of Morgan Stanley says that Q3 earnings growth was up sequentially, which was better than the subdued expectations.
How a function of these two, that is price to embedded value, reacted to that growth.
We feel we're well placed for what the world needs moving forward. So,
first task is to get back to the 100 aircraft airline that we were.
We have seen, the midcaps underperform this afternoon. Nearly 2,200 stocks declining for just about 400 stocks, which are advancing.
All right, well, this is closing bell, and that was the day so far. Markets, of course, have recovered quite a bit from the day's low. And, I mean, that bid is there, which is good to see. It's down about 20 points, I think, if I've got the prices right, 22,943. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi.
Hi, afternoon. I guess it's down, but not out.
Yeah.
Which is better than what we've had in the recent past, right?
I think, just looking at the screen, that in the near term, I think the bulls want to fight for the 22,700, 22,800. Maybe I'm talking too soon, but, that's the sense you're getting just looking at the screen. Even this morning, in the first hour, we were down, I think, close to around 100, 120, 130 points or thereabouts. And from there, it's shown some kind of recovery. Though the breadth of the market, more than what the index does, I would like a higher number of stocks to advance. For the time being, we're at around 450 stocks. Hopefully, by the time we wind up, that advanced decline ratio improves because that's what makes portfolios feel good.
Absolutely. They say that, what are the 7 stages of grief, right? I think 7 stages of market.
Where are we now? Which stage?
I think we are maybe
stage 4,
5.5 or 6, right?
Oh, that's good.
Somewhere close to disgust. And I think that's, but I don't know if that is, if typically sentiment that bad means that you're at some sort of a bottom. Should we read it like that? I mean, good enough for a bounce, but a durable bottom from where the market can sort of, maybe see some recovery and repair. I'm not really sure. But I mean, there is this one decent bounce which has got to come. I mean, otherwise it doesn't work like that. But 10, 15 points lower, 22,940 is where we are at on the Nifty. So it's a flattish kind of start. Look at the ABB India, and we'll talk more about the numbers. Were good numbers across the board for an MNC company to beat by some 20% across the board, and the stock being down 2%. And that kind of shows you the state of the market and generally, that disdain or whatever you want to call it, that is out there, and that's starting to set in. So, I mean, most people just waiting, watching. Everyone is down. Everybody is down by varying degrees depending on what they bought, when they bought. So just, in a way, not everyone in the same boat. That will be wrong thing to say. But I think most people are have been feeling the pain quite severely. Look at market breadth, still 4:1 declines to advances ratio. 2,200 stocks are lower and about 570 stocks are higher. So the broader market, while the Nifty may be flat, the broader market is still seeing a fair bit of pressure. Surabhi.
Absolutely. I mean, we still have a fair amount of red on the Midcap index, and that advanced decline chart is still quite negative. Can't take away from that. However, I will start with some of the positives. I mean, some of the green because there's so much of red. Midcap IT, actually even large cap IT. IT has been a bit of a safe haven today. There's been a small move towards stocks like LTI, Mindtree, 3.5% higher. Persistent is doing really well. About 5% up on Persistent as well. And of course, the large cap names are, also managing to keep the balance on the Nifty. That's Persistent for you. Look at Tech Mahindra on the large cap screen, Wipro. These are some of the names. Coincidentally, Kamaljeet Saluja of Kotak Institutional Equities was with us in the morning, and he was actually outlining how some of these stocks, and if you put some of them for a balanced portfolio then it could actually work out. His large cap picks included Infosys, Tech Mahindra. Stock is done really well. and even the likes of Coforge. So he was saying that there is some growth potential here and things are better off for this part of the market. And that's actually, doing pretty okay. But after the gainers, you have to talk about a lot of the losers, and that's where the disappointment still is quite apparent. Zen Technologies, look at the stock. We'll talk about it as we go forward. It was down 20% yesterday. The numbers came in. We spoke with the management. They're promising to come back to margins of 35%. They're promising, for the growth trajectory to continue. 50% CAGR. Is the market convinced? Not at all. 10% down again on that stock. RateGain, and these are some examples. Borosil, we spoke to a lot of these managements today. Borosil has been another result casualty, 8-9% gone from that stock. So it's still, hurting. There's no taking away from that. But I guess the market will just hope that, eventually this is the fag end of the fall. It's somewhere sort of, coming close to the end of this tunnel.
Maybe on the headline index, right? But maybe select stocks, there'll be more pain out there. And I think a couple of those names like Zen Tech as well as Senco, the problem is they went to the market and they raised money. And then you're giving these sort of numbers. A bit of a heads up would be helpful. That's why, look at Senco. Senco in today's trading section actually is bouncing back because yesterday they put out this clarification after having an interview with us here on CNBC-TV18 as well. They put it out to the investors, a Q&A, with regard to clearing out all the doubts. So I think that's one of the reasons that's up. But otherwise, look at the screen, a couple of stocks. Triveni Turbines, I think that stock has seen a hard knock in this year so far. In the last few minutes, I'm seeing decent volumes on that particular name. It's now moved to the high point of the day. So select stocks, well, after seeing a correction, I think Triveni Turbine, just pull up the last 1 month chart. I think it's down close to around 20%, or year-to-date chart, it's down 20%. So some of these names, they've corrected, and now they're pulling back a little bit. So keep an eye out on that. Let's get Mitesh back onto the show. Hi, Mitesh. Good afternoon, and good to see you win. Today, at least we didn't go down to those lows, right? 22,750 odd. We went to around 22,800. What are the odds that we bounce a couple of 100 points from here, Mitesh? Or do you think these bounces will be very, very good shorting opportunities?
Well, I think, good afternoon. We've repeatedly taken support around these levels, 22,800, 750 zones. I think today also, the morning low was close to 22,801. And the bounce backs are not very strong. So what I want is some kind of a strong reaction. Otherwise, in the next 2-3 days, I'll presume that, we might actually be preparing for a breakdown. One, I think getting past 23,000, 23,000 is the first level. That's where the new intraday pivots are placed. And then once we do that, then I think we need to get a closing about 23,150. I think once these things happen, at least the immediate fear of declining or a downside move will be arrested, and then we can look at a bounce back. So till then, I think just wait it out. Let's see which way the market plays it itself, And on the stock side, I think you were highlighting technology stocks. In fact, Nifty IT is an index which is showing good reversal on the hourly chart. So it should be some IT names on the long side. So I have Tech Mahindra as a buy call. Keep a stop below 1680, look for a target of around 1740. And the other one is Persistent Systems, which I would recommend buying. On a mild decline, let's say around the 5750, 5740 zones, buy with a stop below 5670 for a target of 5820.
Okay, all right. Mitesh, we come back to you in just a bit with more questions. Well, thanks for that for now. ABB India, actually, I was talking about how the numbers were good, but I saw a flash saying maybe the con call happened. I missed that. Yes. Commentary's been a little cautious. So let's get the lowdown from Vivek, who's standing by. Vivek, take it away.
Well, absolutely right. When you're talking about ABB India, it was a very strong quarter for the company. We did highlight the fact that the order inflow, we typically had a quarterly run rate in the range of 3,300 to 3,400 crore. This time around, it had cooled off to close to 2,700 crore. So, that was something that the management explained, saying that, it was on account of a very high base. And the base quarter actually had a one-off large order as well. So even that is something that post all of the adjustments, the order inflow growth actually went up marginally by close to 4%. That is something that the street saw as a bit of a blip. But what's actually transpired in the conference call is the fact that the company has actually alluded to some moderation as far as the high EBITDA margins that they enjoy, and also some moderation in terms of the growth rate that the company had been enjoying, especially in the last 4 to 5 years. So moderation in order inflow, moderation in growth rates. Along with that, even when you're talking about the current order backlog, remember ABB India actually typically has short cycle orders in its order book. So the company has said that 65 to 70% of the existing backlog will be executed over this year itself, and the balance 30 to 35% will be executed over the next year. Now, along with that, what they have said is that the lower growth as far as the order inflow is concerned, they have gone ahead and accepted that. But they have said that this is largely transient in nature. It's not a structural slowdown as far as order inflow growth is concerned. They've also highlighted that there could be some moderation as far as growth is concerned before the next cycle of an uptick actually starts. So they're saying correction in the demand could probably span out over the next couple of years. As far as government capex is concerned, they're not directly exposed, but they said that they do supply to players who are directly exposed. So 30 to 45% is the kind of exposure that they have over there. Moderation in commentary, moderation in growth rates, moderation in EBITDA margin, something that they've alluded to, and this is something that has led to a bit of a sell-off from the highs that we saw today.
No, not just from today, from the top as well, I guess. I was just looking at it, Vivek, about 40 to 42% down from the peak ABB. Sorry, throwing an out-of-syllabus question to you just like that. But from the highs of almost 100 times forward PE, now I guess valuations would have come down to what, 60, 70 times for ABB?
Absolutely right. And, when you're talking about ABB India, also have to keep into context a whole host of other, capital goods companies as well. So not just ABB, look at Siemens, look at Cummins, look at L&T. All of these companies have actually seen multiples moderate quite significantly. A little bit of a concern in terms of domestic capex, not revving up as expected, and that is something that a lot of them have alluded to. Even when it comes to Siemens, they also said that one particular segment, process automation, etc., is not growing as they expected, and ABB too is actually one of the companies that's been impacted by that. But overall, especially in the last 4 to 5 years, management, was at pains to explain that they were very high growth years, so they are now on a higher base, and growth to go ahead and actually continue at that pace could be a little tough.
Okay, all right, got it. Thanks very much for that, Vivek. Thanks for the perspective there. So ABB not quite firing up the street today. Let's take the conversation ahead. We have Deepak Shenoy, founder of Capital Mind, joining in. Deepak, hi, good afternoon. Great to have you on. So tell us, what have you been doing in this big market fall? Have you been buying, staying on the sidelines? What? And throw in a word on a stock like ABB. I mean, it's got everything going against it. Now there's slightly muted management commentary. Anyway, there was this whole worry about whether the government of India's capex will be as strong as it has been last 2-3 years. So, all the noises are on the negative side. Your views?
Yeah, things seem to have changed quite a bit in terms of narratives in the last two months. But generally, if you look at the market results, and most of the results are out now, in general, we haven't done too badly. Our portfolio average growth is now at about 18 or 19% in terms of net profits. Even the Nifty has done reasonably. I think it's still at about 10% odd, and we're looking at median numbers. We're looking at even mid and small caps delivering decent returns. Of course, you could question valuations, but I think there are lots of individual companies where valuations are at a much more affordable level. We are constantly on a rebalancing portfolios. So sometimes when we find alternatives that are better, we will move from one stock to the other. We have some cash now because of this process of rebalancing. In some of our momentum portfolios, which typically follow price action, naturally cash levels are higher simply because there isn't enough momentum in the market or even enough price action in the market to justify 100% allocation. But that's by nature and that's by design. Even in past falls, we have seen very high cash levels as well. So I think at this point, if you're a fundamental long-term investor, this gives you more room potential to pick up stocks if you've had cash, or rebalance your stocks to more alternative positions that may have been unaffordable earlier, are probably more useful to get into now, including in the large caps, in the financial space, which has traditionally been a little bit overvalued, but now is probably the most undervalued of them all. So it gives you opportunities there. And, even within the other spaces where people are talking of 10, 20, 30% falls, sometimes the stocks are still expensive. So they're not come to a position where they are worth buying. But in other cases, in sectors like even in defense and even in manufacturing, I think some stocks have come to very reasonable levels. So we are in the process of, this is the time to work.
Give us the names. So Deepak, give us some names. Whether it's capital goods, MNCs, defense, that's the biggest question. Where is value emerging with some prospects of growth? That's exactly what everybody wants to know now.
Yeah, so to give you an example, if you look at the credit situation in the market, most of the fears around unsecured loans have gone away. And I think the market is going to price people who companies that give unsecured loans in a better way going forward, and we're going to see this when RBI loosen up on that in terms of growth, because it's fallen to like single digits or close to single digits now. One of the stocks we own, and we've started to own it very recently, is Bajaj Finance, where we're saying that, okay, it's had its period of consolidation. It's probably going to outperform its peers simply because it has better capital management strategies, better ability to manage its liabilities, and potentially growth comes back in the sector. And it's probably going to benefit from this growth meaningfully compared to even the some of the private sector banks in the space, and perhaps compared to most other NBFCs as well. So it's a large cap, but that's where it is. There's Bharti Airtel, which showed a pretty interesting result this time. Of course, there was a one-timer, but even if you discount the one-timer, there were pretty decent results. And I feel going forward, the problems with Vodafone are going to become more and more evident, and more flow is going to move to Bharti and Jio. I think now more Bharti than Jio, because what's left in Vodafone are mostly the corporate-ish kind of customers, which will have a natural flow to Airtel. So there is that naturally flows. And then, of course, you got consumption, even hospitals. Hospitals seem to be doing, I have Narayana, and, that's been doing okay. It's not been doing badly, which is nowadays considered, the most bullish thing of all.
Okay, all right. Thanks a lot, Deepak. Good to hear a couple of names coming in from you. But let's get your view on RateGain as well. But first up, let's get in Upasana. The stock is under some pressure. They've cut their guidance for the second time in this fiscal. The street doesn't like it. Upasana, fill us in with some details there.
Certainly, Nigel. The stock is down 17% in the last 2 days. It's down for the 8th day in a row. Now, company held a conference call, and here are some of the important highlights wherein company has cut its revenue growth guidance to 12 to 13% versus 15% earlier. Remember, this is the second cut in revenue guidance for FY25, which was earlier guided around 20%. Now, company is expecting a single-digit revenue growth in Q4. This is due to delay in signing of certain deals, is what the company has highlighted. And it says that the company has experienced delays in decision-making in some markets due to various factors, such as significant increase in deal sizing, also coupled with delay, which is due to strategic structuring and cautious spending, particularly in US and European market. And company has also shared its outlook on the margins. It says that the Q3 margins of 22% will not be a base margin going forward when asked upon it. And it says in the short term, some compromise can be expected on the margins, but in the long term, it is confident of achieving 20 to 25% margins as the company will scale its business to 2,000 crore plus revenues, is what the company has indicated.
Sorry, profit growth, Upasana, what are they saying for, the guidance that they put out? Sort of earnings growth, what are they saying? 10 to 12%?
10 to 12%, yeah.
10 to 12%. So basically they did 145 crores in sort of net profits. I was just looking at, used to trade at 50, 60 times earnings, but growth also for something like a RateGain used to be, I remember their stated guidance for a couple of years used to be 60%. Along with, but that was including acquisitions, etc. The company also raised money through a QIP about a year back, but the money is still with the company. It was raised to make an acquisition, but there's no acquisition in sight. So now, assuming a 15% growth on top of the 24 numbers on a FY25 basis, it's trading at about 35 times earnings. It's 5,900 crore in terms of market cap now. Deepak, any thoughts? RateGain, if you've owned it, you've studied it, any thoughts?
No, we own it, so we have seen the difference. I think still interested in it in more longer term. In the short term, I think there is going to be pain. Like they said, the margins are likely to contract, but they have grown more than 60% in the last 9 months. So the first 9 months of the year, they've already done 154 odd crores in net profit. I think, growing that, now their earnings, I mean, the trailing 12-month P is about 29 times even at today's prices. This would be okay if they were growing much further. Of course, short-term growth, I think, will suffer largely because of all the issues that are happening with world trade and, the uncertainty with respect to what is happening with tariffs. Obviously, all of the plans that any corporate abroad may have will get derailed to a point where clarity emerges on tariffs. So I think if you're a shareholder, your options are to either wait out this time or lower your position size to a point where the pain may not be as much in terms. So for us, it's more comfortable at a position level. But if it was too high a percentage of your portfolio, you might want to bring it down to a point where some of the visibility comes back, at least to management more than to us. But also that this uncertainty around effectively what people will invest in terms of world transport, travel and transportation in general will give them more visibility into revenues. I don't currently see this as a long-term problem, but I think the short term you will have to face more pain. Stocks already down, I think 40 or 50%, more than around 40% from the top. So it's already seeing that pain.
Okay. All right. Got it, Deepak. Let's focus on another stock, Zen Technologies. I'm looking at a Nuvama note which has just come in. They maintain a buy rating on the stock, but their target price now they've kept it at 1,650 from around 2,200 earlier. The stock, though, continues to reel under pressure. Upasana, tell us more about this one. The numbers were disappointing. We had the management earlier today as well. Tell us more.
Well, the stock has now lost 60% of its value since Jan this year. Now, the stock is down 30% in the last 2 days after its Q3 results. Now, company's growth lowered this quarter as compared to past other quarters' performance and missed the street estimates. Now, promoter holder in the company also slipped down below 50% in the December quarter. This was mainly due to equity dilution of 1,000 crore QIP launched last year, mainly on account of acquisitions and working capital needs of the company. We spoke to the management earlier this morning, and here are some of the important details. Now, company says it has no plans to buy shares from open market, and it also sticks to its FY25 guidance of 900 crore revenue and 35% EBITDA margin. It has also guided that top line will be growing at 50% CAGR for the next 3 years, and margins of the company, which was the main concern, were down about 1,400 basis points. This was mainly impacted due to change in the product mix. Also, companies emphasize that 800 crore orders will be finalized by Q1 FY26. Listen in.
The dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, on 2 occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. So, I don't think we will be entering the market to buy it. Because the intention was not to trade sell high and buy low. The intention was we wanted to have some money on the table. With respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And margin, I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition. We have been saying that there will be a CAGR of 50% over the next 3 years, average CAGR of 50%. So depending on the inflows of the order in Q4 and Q1, we will be able to actually predict what will be the top line for Zen in 26. But we expect even if it is muted, we expect that the 27 and 28 will more than make up the gap in terms of absolute number that we are planning to achieve. I would say, the pipeline, we say whenever the fund allocation happens, etc., we think by the first quarter, almost about 800 crores worth of orders would have been decided.
Okay, all right. So that was the management. Deepak, what do you make of this one? The numbers are disappointing. The street is a little bit skittish with regard to whether they'll achieve it, their 900 crore target. But the problem is the management is saying the near term, those orders are not really coming in, but they're optimistic that in future they'll continue to grow at 50%. For the time being, the street doesn't like it at all. 20% down yesterday, 10% down today. To be fair, intraday there was a bit of a recovery, but then that got sold into. What would you do with the stock? This is the same company that raised money at around 1,600 crores via the QIP route.
Yes, in fact, I think so. We own the stock, so we have a small percentage in our fundamental portfolio as a tracking position. But it's interesting because this is where you have a no debt company, relatively with 1,000 crores in cash, about 8,000 crores in market cap, so 7,000 crores what you're paying for the core business. That core business seems to be growing quite reasonably well, although they've guided for 50%. They've grown 44% revenues. They've grown a reasonable in profits as well. There is some investment that is happening in terms of growth, in terms of acquisitions, some of which they have demonstrated. We know that government spending is poor because even now the government has a 1,40,000 crore balance sitting with the RBI, which is not spent. These balances usually happen after the March quarter advance tax numbers. Nowadays, it's happening, 1 month before, which means that the liquidity situation is where the government isn't spending much at all. It may be there is a considerable amount of expense that is going to happen next year anyway. It's part of the budget, but what they have planned for this budget has also not been fully allocated. So I think to that extent, the government orders should continue to flow in. Maybe there is some pausing in spending for multiple reasons. They've talked a little bit about how the government is looking for more indigenous supply rather than anything with foreign components also, and therefore scrutiny is increased. But let's assume that that is just a management defense. But either ways, I believe the spending will come in the next 2 years. Their numbers are relatively small compared to the overall spend of 1.5-2 lakh crores per year that the government will do just on capex. And I think long term, you will still find that this company should do well going forward. I don't believe that in the short term. I mean, the disappointments and the valuations were high enough for, I think, the stock to get beaten up quite a bit. Provides an opportunity to look if you have a 3-year horizon. But nowadays, nobody wants to look at the opportunities. It's just like how much more will it fall? It's a good time to be silently kind of going about your business and looking at it objectively rather than to just say that everything is going to, held in a handbasket. So I think, yeah, there is potential here.
Okay, there is potential. Deepak, thank you very much for joining us. It's a pleasure, and hopefully next time we chat, maybe we get a bit of we get some green on the screen, right? And maybe fleeting, but corrections in small doses is better than one large non-stop slide that we've had for a while now. So thanks very much once again. Thank you. Well, we'll take a quick commercial break here. Barun Goyal, Senior Fund Manager, Equity at Mirae Asset Investment Managers, will be joining us on the other side. Stay tuned. Okay, welcome back. Varun Goyal is now joining our Senior Fund Manager, Equity at Mirae Asset Investment Managers. Varun, good to have you with us here. Thank you for your time. Good to have you back in the program. So tell us a little bit about what you guys at Mirae are doing and, how are you navigating this very sharp fall that we've seen? I mean, I was looking since the beginning of this month, the mid and small cap indices are down themselves 10% each, just this month. And of course, stocks are down 20, 30, 40%. When we say Nifty is at almost 23,000, if you look at some mid-caps, the appropriate level would be, 20,000 Nifty, because it doesn't show the pain that we've seen in broader markets. So what are you guys doing?
Yeah, good afternoon, Prashant. Thank you so much for having me on the show. I think if we look at the broader markets, a lot of froth is getting cleaned up. There were certain sectors like capex-oriented sectors, railways, defense, some of the PSU names which had moved up quite a bit in the last 2 to 3 years. We are seeing a fair bit of correction, and there's some pockets of froth in the small and the mid cap space, which is getting corrected now. Our sense is the economy as such will start seeing a cyclical uptick come April. We would have completed 4 quarters of slowdown, and by coupled with what the government has done in the budget and the RBI policy, and the cooling off in valuations, I think it looks a much better environment for investing going forward. And our sense is, a large part of the pain may be behind us. We have to look at stocks from a bottom-up perspective. There are ample opportunities for bottom-up stock picking, and we believe that as the growth picks up, we would see much better earnings scenario in FY26 as compared to what we saw in FY25. So our sense is, we would see almost 11-12% kind of earnings growth in Nifty in FY26 as compared to almost 2-3% kind of growth that we've seen in FY25, and that should lead to better performance from the market as a whole.
Okay, hi Varun, good afternoon, good to see you. And Varun, with regard to the headline index first, what is your take? We went through a period of, say, exuberance. The Nifty went up. It's pulled back a goodish bit right now, and at least the reading on ground is things are improving. We have got those rate cuts, you got the consumption boost, you got liquidity that's coming in there from the RBI via the swaps, via the OMOs as well. So do you think that at least on the Nifty, bulk of the correction is in the price? Would you think so?
Well, if you look at the valuations, Nigel, so I think we take 1,200 rupees of EPS for Nifty for FY26. We're trading at around 19.5 times. If you look at the 10-year average, it's around 17-18 times. So maybe you are 5% more expensive than the historical average. The markets may or may not correct. I think we could see a time correction. We could see a 5% kind of price correction, but there is not much to lose, I think, as far as Nifty is concerned. So broadly, our view is that as earnings growth come back, market should stabilize. Of course, things have become a little more expensive as far as the small and the mid-cap space is concerned, and certain cyclical sectors, and there the correction has been much deeper, and there also we see quite a few pockets of value are beginning to emerge.
Your top, the sector that you like the most, I think, is tech?
Yeah.
One of your top sectors, yeah. Yeah, Varun, go ahead.
So our view is that with the very sharp rupee depreciation, all the exporters, be it pharma, be it IT, be it chemicals, all of them will benefit. And we are anyway seeing, as far as IT sector is concerned, the demand in North America, especially the BFSI space, is extremely strong. Considering that North American BFSI is 1/3 of the revenues of most Tier 1 Indian IT companies, we believe the environment is only getting better. And I think rupee will definitely cushion the margins. In fact, most companies should see better margins than what this one in FY25. So outlook on IT is definitely good. I think pharma, again, we're seeing a fairly good growth as far as domestic market is concerned, and both the CRAMS opportunity and the US generic opportunity continues to be extremely strong. Notwithstanding the concerns about US Biosecure Act and other things, I think there is a true business case which will find its own ground going forward. So we remain quite constructive on some of these export-oriented sectors. Other than that, of course, banking remains the cheapest part of the market, and I think valuations seem fairly reasonable. Our sense is we may have seen the worst as far as margins are concerned, and this year onwards, we should see a healthy double-digit earnings growth for most banks.
So from the banking pack, I think private banks is what you like.
So I think both public and private, I think looks like credit growth will be 10-12%, and most Tier 1 banks will do well.
Okay, all right. And I was looking at the RBI data. I think a couple of months ago, you had that blip where the credit growth dipped below the 12% odd mark. And now I think it's back at that 12% odd mark. So that's good. And just a quick question on tech. You like large tech, or do you think some of these mid-cap IT stocks, they've come to levels that you like because they have been more expensive than the large cap names? But given the current market setup, what's your preference?
Well, we continue to like tier 1 IT names. I think the mid and the small cap space also, wherever there is comfort on earnings growth, I think some of these mid and small IT companies can grow much faster than the large cap players. So as such, we expect they will continue to do well.
Okay. So large cap IT, some big banks, got that, Varun. But Varun, what about mid caps? I think that is the trickier question. Buying, good large caps is, they're all season plays, right? May not work in 1 year, year two. At least you can sleep peacefully on most of those stocks. What is the approach that you're taking to the mid-cap market? Have you been sort of buying in the fall? Have you been, churning positions? And what's the advice to investors? Where do you now find reasonable safety and good value emerging within some of the mid-cap sectors?
So, Sophie, I've been in the markets for almost 18 years. And every 4 or 5 years, you see a shakeout, and this time is no different. So I think if you look at the small cap as a space, we have seen a 24-25% correction from the top. I think mid cap may be more like 15 to 18%. So I think a very large part of froth has been cleaned up. I think there are definitely pockets of value emerging across the space. If you look at some of the cyclical sectors, be it capex-related stories, be it some of the defense stories, if you see real estate, which has done incredibly well. So a lot of these high beta sectors, which kind of moved very fast, very hard in the last 2-3 years, they've also seen the worst kind of correction, and they definitely select pockets of value emerging in some of these spaces. I think again, as far as IT, pharma, wherever we are seeing correction, we are looking at those opportunities. So I think calendar year 25 is a great year for stock pickers as far as the small and the mid cap space is concerned. I don't know how much returns you will make this year, but if you construct a good quality portfolio in the small and the mid cap space for this year, I believe that will lay the foundation for good compounding for the next 3, 4, 5 years.
Problem is, people are already invested, right? So that's always the problem. I mean, when it's the right time to buy, you're out of funds, or maybe you can't do because you're already invested. And I think this boom has been so large that even sophisticated investors, I think, are feeling that crunch, because people are invested not just in listed stocks. I mean, the boom in unlisted, the boom in SME, and those are relatively illiquid spaces. So. And I think that is one of the reasons why there is very little bounce which is coming. The market just sort of, drifting lower at about 22,950. But that point is well taken that, those who created cash early, now's the time to then slowly start to build a good quality, reasonably priced portfolio, which of course was a hard thing to do over the last couple of years or so. Just maybe a couple of more names before we go any further. So, Zen Tech, of course, we mentioned. Look at something like a Goldium International, right? I mean, again, much fancied name. Stock got to almost, I think, 600 rupee levels. Stock's at about 362 now. Look at Swan Energy, huge volumes. Swan is now at about 400 bucks. Stock was at about 800 rupees, not very far back. Look at RateGain, of course, I think we mentioned. EMS Limited is another one. Stock's at about 620 EMS. Again, I mean, had a bit of a one-way kind of a move sometime back. High was about 1,000 plus. All cargo logistics has come off very, very sharply, and that's the other one. Nelco is down to about 791, and here the high was about 1,500 rupees. So you just have to look, and stocks are down easy 30-40% in many cases at this point in time. I must point out the market, the Nifty did come back into the green a little bit. And market breadth has also improved a little bit. So we're done, it's about under 3:1 in terms of declines to advances. Survey.
I just wanted to go back to Varun because I did pull up the small cap fact sheet for Mirai, and Varun, among the other funds that he manages, is also one of the funds that he looks at. And Varun, I was looking at the top 10 holdings. So you do have some of the capital market plays like MCX, you have CAMS. Then from the defense space, there is Bharat Electronics in the portfolio, PSU in defense. And I want to take up these two segments particularly because obviously there's a maximum amount of flutter around these two places. Capital markets for obvious reasons, and defense, because the narrative has suddenly, turned completely. I'm not sure if you've pruned your positions in these kind of stocks in these segments, or whether you're, willing to keep the faith and ride this out. If you could just briefly explain.
So we just raised our small cap fund. In fact, we are in the process of portfolio construction. And it so happens that with a very large drawdown that we're seeing in the small cap space, I think it is giving us a lot of opportunities to pick and choose, especially in some of the spaces where we believe earnings growth will sustain, while the valuations may have pulled out very materially. So I think as far as the financial savings as a theme, we believe is a multi-decadal theme. We will continue to see various companies in this theme, whether it's AMCs, whether it's wealth management companies, whether it's depositories, exchanges. We believe there is a fairly long runway for growth as savings shift from physical to financial, and various market participants will continue to benefit out of that. While there might be a blip of a few quarters because of market sentiments, but broadly the trajectory continues to be in place. Similarly, for some of these capex sectors, be it defense, be it railways, wherever there is visibility on earnings growth, where there is a large order book, we believe as and when the valuations are attractive, we would like to buy, and we hope that we should see sustained earnings growth over a longer period of time.
And interesting time. Yes, I'm glad you brought this up. It slipped my mind as well. Correct. I mean, Miraiz, you never had a small cap fund as a house for the longest time. It's only in the last 1 month that you folks decided to open up a small cap bouquet as well. So very, very interesting times, and maybe, as you're saying, getting an opportunity to pick stocks at much, much better valuations as well. All right, Varun, thanks very much. Good conversation as always. Look forward to more in the future. Right now, we have to move to our special segment, D Street Chatter. Nimesh is always joining in with insights from the sidelines of the conference, where he has been camped out pretty much, getting all the buzz and the chatter. Nimesh, so what's the mood like? The market stabilized at least a little bit between yesterday and today?
Well, simply from a mood point of view, I'll tell you the mood is very, very bad. I spoke to so many fund managers and investors here, and everybody seems to be creeping about the fact that there's so much of panic and so much of damage in the broader market stocks in the last couple of weeks. And also, mood clearly is very, very somber. But from a market perspective, we've seen a good recovery again in intraday today. I guess 22,800 is getting respected again in today's market. So that's a very crucial level to watch out for. But I guess this pullback is also backed by some bit of institutional buying. I've been saying for the last couple of days that there is some signs of nibbling in the broader market names by institutions. So that continues even in today's market. And for a change, there is a MOC basket buying at a leading FI desk. So that's something to watch out for. But again, today's FI number will look a bit skewed, largely because of the large Bharti block. Remember, only 25% of that block was bought by Bharti Telecom. The rest was bought by institutions. So both FI and DI number may look big because of that Bharti block in today's trade. In terms of activity, from a sector point of view, as I broadly said about broader markets, there is a bit of buying interest. On the sell side, there is a lot of pain still in the mid cap, small cap, especially the small cap and the micro cap names. And within the large cap stocks, there is a bit of selling again in the PSU basket. So that's one space which stood out in terms of the sell side. But I guess today's recovery is largely because of FI buying, and there is a MOC basket as well towards the last 30 minutes of trade.
Okay, all right, valid. So when the institutional numbers come later today, we need to keep that in mind, that big Bharati number that things look lopsided. But Nimesh, tell us individual stocks. What are you picking up?
Well, so in terms of individual names, the first stock is Grasim. After a long time, some bit of interest seems to be back in that particular name. So there is delivery-based buying in Grasim in today's state. Some large FIs seems to be quite interested in that name. So that's the first stock. The second stock is Asian Paints. This is interesting. For a very long time, that stock has really underperformed. There has been massive selling as well. Now I'm getting a sense that maybe that large selling from a global fund seems to be largely getting over in Asian Paints. So that's the flow that need to track in Asian Paints there. The third is a couple of stocks where there is FI selling. Kotak Mahindra Bank stands out. Despite such a good positive commentary and the RBI lifting the ban, still there is selling in Kotak Bank. So that stands out. And IRB Infra is the other name where there is aggressive selling from larger FIs. So both these names on the sell side, so expect high deliveries there. And the last is Aarti Pharma. Weak market, that stock has been buzzing off late. In fact, the stock is at 52-week high. Stock was up 10% yesterday. Even today, the stock is buzzing in trade. I understand for the last couple of days, a leading family office has been an active buyer, and hence you're seeing that outperformance in Aarti Pharma.
Okay, all right, Nimesh, thanks a lot for giving us all those cues. By the way, keep an eye out on Vedanta. The stocks move to the high point of the day. There will be that creditors meeting later today. and it moves in the direction of the demerger that was announced, a year or so ago. So they've already said that by the first quarter of next fiscal, that's when the demerger will actually take place. And for today, there is that creditors meeting. So that's where the street is bidding up the stock. It's seen a sharp correction from the peak. So that one's low. And you have Reliance Infra that's popped up in trade because they're looking at moving into solar as well as renewable energy manufacturing. So that explains why that stock from the lows of the day has seen a bit of a recovery. Well, we'll slip into a short break. Come back. We'll get you some technical trading calls. Don't go anywhere. Welcome back. Well, just keep an eye out on Deepak Nitrite. That's a stock that I'm looking at. I think there's some open interest shedding out there. So that could be one of the possible names that, come out of the F&O ban. So we'll keep an eye out on this stock. It's got pummeled in the last 1 month or so. But that one, I think, should be on your radar. One of the probable names that come out of the F&O ban. Mitesh is back with us, though. Mitesh, tell us, what are your trades?
Wipro is something, which has come on my radar. That's a BTST. Keep a stop below 310 or levels and look for a target of around 320 over here. And the other name on the list is STBT call, which I would recommend on the charts of AU Finance Bank. Estimating here with the stop at 506 for targets of 495.
Okay, all right. Thanks a lot for that, Mitesh. For the time being, we slip into a short break. On the other side, Jay Bala is waiting for us. We'll wait to hear from him with regard to what's the outlook on the Nifty Bank, as well as individual stocks. Stay with us.
Very good. One of those massive words today.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million now.
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
Okay, all right. Welcome back. As promised, Jay Bala of Cash the Kiosk joins in on the show. Hi, Jay. How are you feeling, Jay? What do you make of this? A little bit of a bounce. You know, everyone, the bulls are saying we're getting bounced. You know, we have made quadruple lows. You don't think so? I guess you believe it's a good shorting opportunity. Okay, so tell us, what are the levels you're looking at on the down and on the upside?
Hi, Nigel. Good to be here. And they're not that wrong. In December, I pointed out 2 time pivots for the markets. One was January 24th, another one was February 18th. The January bottom was on Jan 27th, one trading day after Jan 24th. And we got a low on February 17th to balance that one day of January. We got probably one day ahead at 22,724. So there is a good possibility that if the markets can hold the low registered yesterday, it can see a sizable rally, probably into the 24,000 if the bulls can pull their acts together. But it's very important that the market doesn't break February 17th low of 22,724 for the next 2 days. If it does, it can expand lower. If it doesn't, it can expand higher to somewhere close to 24,000. Even there's a possibility of 24,500. But in the higher time frame, looking at the broader markets, this looks like a counter trend bounce.
Jay, I mean, that's been a while since you have joined the channel on a Tuesday and said that we can put, if we protect the lower levels, maybe we rally another 3.5–4%. I think that's the most bullish I've heard you, in the last many months. So I think the bulls will be cheering for you. Okay, but they'll be wondering, what about the small cap index? Because that's got a hard knock. If the Nifty can protect lower levels and maybe bounce a little bit, what about the small cap index? Where is that one headed?
Yeah, I think the small cap index has a potential to rally somewhere into the 17,000s from current levels. So 17,200, even 17,500. But I know the damage has already been done in the medium to long-term charts. We'll come to that on some other day when there is bullish possibilities. We'll discuss that. So as long as today's low or yesterday's low is protected, if the small cap index can finish in the green tomorrow, I think there is a good rally potential to about 17,200. But portfolio holders must note that might be an opportunity to exit longs for the medium to long term. But we'll evaluate as the market unravels.
We'll see that later, Jay. If you're saying that from these levels, the small cap index can bounce 10%, the bulls will be very happy. I'll tell you, 10% is from around 15,200 all the way to around 17,000. Let's get to a couple of stocks then. I believe you've got a call on Thermax as well as on Coforge. And you seem to be in a bullish mood because there are 2 buy calls you have got for us. Tell us more.
It's the market, Nigel. I'm just a slave to the market. I just follow what the market is saying or whatever the interpretation I'm making out of it. So Thermax, it's had quite a bit of negative run from July, but the price structure says that there is a potential that a recent low is likely to hold. So as long as the stock can hold about 3,100, it can see about 15 to 20% rise from current levels. But for both the picks, stay in the shallow end of the pool. Keep it experimentative longs, not as a head-on bullish signal. The other one is Coforge. Today Persistent is doing quite well. So if Coforge can hold close above 8,100, I think the low of 7,500 registered a couple of sessions ago, that's likely to hold. If not an attempt at the all-time high, probably somewhere between the 10,000 mark and current levels. That's the potential for Coforge.
Okay, what about the dollar index? Jay, if I have to look at some positives in the recent past, one has been that the dollar index cooled off from around that 110 to around that sub 107 odd mark. Lawrence Blanco earlier today was talking about, in his note, he says 104.7 is important. If it breaks that, we can see lower levels. Where do you think it's headed?
Absolutely. 104.8 is my level. So, we are in sync there. And before Trump's inauguration, I had pointed out that the dollar index and the US 10-year are likely to cool off, and that's playing out. But contrary to many eliticians, including Lawrence, I'm seeing this as a bullish potential, a bullish correction for the dollar index. But I will drop that bullishness if the dollar index were to exceed 103, not an exact number, slightly around that number. But I see the dollar index heading to 114 in the short term, by 2026 to 126. That's been my call for quite some time now. But it's absolutely important what it does between here and 104 104.8. So watch the dollar index quite closely.
All right, Jay, stay with us. You know, what we're going to do is we'll just come back, but that's very useful and it's an interesting conversation.
I think multiple Tuesdays, though just in the near term.
Just in the near term. I mean, that's the point, right? Small cap, for example, is saying a bounce. But that,
possible.
that's an opportunity to exit is essentially what Jay's view is. And of course, similarly for the Nifty, etc. as well. So we'll see if that bounce is going to come. But as he said, next couple of days or next few weeks are going to be important. Nifty 22,920. We'll leave about 35 points lower, about 100 points off the day's low. Nifty Bank will end, I think, about 300 points, less than 300 points off the day's lowest point. Mid-cap and small-cap indices, you know, of course, the small-cap index, no real respite, about 2% lower. Mid-cap down 0.4. Market breadth, of course, quite negative.